Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So as far as the market goes today, we continue to get that melt-up type action that we've had ever since the resolution of the debt ceiling issues. And there's not much to say really besides the indices, besides the fact that we are melting up, continuing to make new highs, and there's no real obstacles in the way of this market. And we'll go ahead and take a look at the chart of the S&P before we get into some individual stock action that we've been seeing. The spiders, as you can see, we resolved the debt ceiling issues, been melting higher. The trend is your friend. Long-term trends, intermediate-term trends have all remained to the upside, and now our short-term composure is back bullish again. We are getting a little bit extended, you could say, away from the 8-day moving average and well extended from the 21-day moving average with this extension we've gotten over the last couple weeks. So I would say it's a little bit tough to continue to chase, especially highly correlated stocks right now, but we are in the middle of earnings season, and earnings season is providing a little bit of opportunity for traders to potentially capture a little bit of alpha. And we'll start first with a few stocks, some that are reporting soon and a couple that have just reported. And we'll start with Apple. Obviously reported last night. It's always a much anticipated report. But one thing that gave me a little bit of pause leading up to the Apple report was the run that the stock had been on over the last few weeks leading up to the announcement. Recently, ever since Apple's had that big fall from more than $700 a share down to below $400 at one point, the most alpha you've gotten when trading Apple and trading Apple around earnings specifically is when there weren't really high expectations going into a report. That Apple, they are slowing down a little bit in terms of their growth. They didn't, they came out with their new phones recently, but that wasn't going to factor a ton into this quarter's earnings report. And there is some excitement over potential new product lines in 2014 and things like that. But there wasn't anything that I really expected to help Apple deliver a blockbuster report. And given the fact that the stock had rallied really impressively over the last couple months, month and a half or so, I just didn't see any way that it was going to be able to really trigger a big move beyond the rally that we'd seen. So today, we did get a decent report last night. It was a solid report, nothing spectacular, like I didn't anticipate anything like that. But we were able to open higher as some analysts liked the report, and there was some talk of those new product lines. But during the session, we got a big engulfing bar to the downside that sort of tells you that the music has stopped a little bit short term for Apple. It doesn't mean that it can't find its footing and put in another base and potentially rally from there as we do get more excitement over potential new product lines in 2014 and potential share buybacks and all that noise that comes with Carl Icahn being involved with the stock. But I think Apple's going to need some time and should be off your radar from a short-term perspective right now. Facebook was an interesting case. Today you had Forrester, a market research group, come out and say that they did a bunch of research and conducted with a bunch of marketing heads at major companies about their satisfaction with different advertising platforms. And Facebook came near the end of almost all of those surveys, and people were generally dissatisfied with their results from Facebook advertising. And so I think that weighed a little bit on the stock today. Technically, it's just been weak over the last week and a half also. As you can see, it made a new high, closed that gap, put in a little bit of a bear flag, I guess you could say, above the 8-day moving average, and broke below it. This is one that, like Apple, I think it needs a little bit more time. Earnings are going to be key here. They come out, I think, tomorrow. So obviously, that'll be a big catalyst for short-term direction. And it's somewhat like Apple, is that Facebook, when it was trading down at $25, nobody really had high earnings expectations for the stock. But in that earnings report, they came out with amazing earnings growth in the mobile advertising area, which was a big buzzword for institutions. And that is what triggered this big move. But now expectations in these upper levels are extremely high. People are expecting sort of a blockbuster type of report, I think, from Facebook. And I'm not sure that they necessarily have that in the bag. But we'll see what happens. The recent pullback off highs perhaps gives you a little bit of room, dampens expectations a little bit for the earnings report. So you never know, it's possible they could come and meet expectations. Google's another one that, as far as actionable setups, this is one that obviously Scott took Google calls into the report, and that turned out to be a very good trade. And then talk about more calculated trades after the report. You had sort of a 2-day mini consolidation after that earnings gap and go, and you could have used either the previous day's high in this case, or you could have used the pivot high here that was around 10.19. I'll draw a line for you here just so you can get a picture of it. You could use those as your potential entries on that trade. And then you got another little pullback into that prior breakout level. And then today, again, you could have used the previous day's high as a potential short-term entry point. I think given how far Google's come, in a short period of time, you don't really look for additional big-time swing trades, but these are decent percentage moves in a high-profile stock like Google above yesterday's high. That's a great cash flow type trade. You can trail your stops in those situations and potentially look for more momentum above this pivot that stands around 1040. So just another good calculated trade. Some in off the charts a little bit, we've been focusing on some names that are a little bit more off the beaten path than some of these very highly followed and highly covered high beta tech names. But that doesn't mean that there can't be actionable setups in these high beta tech names. We highlighted a setup in Apple a couple weeks ago on off the charts, and then we've been mentioning Google on the morning call and in the virtual trading floor for potential setups there. So don't focus too much on the symbols just because of the symbols. Focus on the setups. That doesn't mean that good setups can't happen in high-profile stocks. But talking a little bit more about off the charts, last night we listed 2 new ideas. We're trying to do a better job, obviously, if you're on the newsletter, of keeping track of old ideas and following up and not losing sight of patterns that are still intact. But we do add a few new ideas every night, generally. And Proctor and Gamble long and Tesla short were our 2 new ideas last night. We'll start with Proctor and Gamble long. Scott talked about it in the morning call this morning. I've noted it a little bit in the aftermath of that no taper decision that these rate-sensitive defensive type sectors have been perking up and acting really well after that decision by the Fed not to taper. I'm talking about the utilities, I'm talking about the home builders, and I'm talking about consumer staples. And Procter & Gamble fits into that consumer staples category and is perhaps my favorite stock in that group. And what do you know? The stock, after a big pullback during August into September, people expected that potential QE taper. It's bounced really nicely off of those levels and now looking set to make a new high. We talked about this little downtrend type pattern setting up in off the charts. We got a nice push above it, some nice momentum for a sector that's not supposed to have explosive type moves. It's more of a dividend defensive type sector. But when you do have an environment where bond yields are going to stay low, rates are going to stay low, you have the potential for these types of defensive sectors to outperform. So you can factor in some technicals and some fundamentals in trade ideas, and that's what we did a little bit here with this Procter & Gamble idea, and it had a great day one move there. Could potentially accelerate even more above highs here. Then you talk about Tesla short. This is one that was talked about a ton on the virtual trading floor as well. So if you're looking for a play-by-play, and it's also an example of, in off the charts, and generally speaking, we don't talk too much about swing short ideas in a very bullish market, which is what we've obviously been in for the past few years. It's a lesson to you about shorting in a bull market is that it's not completely taboo. You can have decent short setups in a bull market, but you shouldn't be greedy with your targets on those. And yeah, we do provide targets on off the charts on those ideas, but in a vacuum, you'd obviously let swing trades play out exactly to your targets every single time. But when you have this really bullish tape, you don't want to be, like I said, greedy with short ideas. And Tesla was a perfect example of that today and shows the value of the virtual trading floor. Going back to the chart, you can see today we got that acceleration below the trigger short point that we talked about in off the charts last night. But Tesla, after providing really nice percentage move to the downside, reversed back above that trigger. So if your trigger was a daily close below that level, perhaps that short didn't even trigger for you. But if you're on the virtual trading floor, if you're taking a nimble type approach, this was an idea that played out really well and could have potentially delivered you some nice percentage gains in a short position there. So just a lesson on shorting in bull markets is that you sort of got to take your money and run when it comes and not be too greedy on those positions. Talking about a couple more stocks that have been mentioned on off the charts, which has been outstanding recently, and a newsletter that I think for a very low cost, $30 a month, it's just an outstanding value. Whether or not you're on the virtual trading floor or not, it sort of filters out some of the noise in the market and just delivers you a very clean picture of what are the quality setups in the market. But anyways, Wells Fargo is another one that we've been talking about. You go back to the chart of Wells Fargo. The banks are another group that when the Fed decided not to taper and rates started falling again, the banks started coming back a little bit more into favor. And Wells Fargo has a downtrend in place that we've highlighted on off the charts. And the stock has been a little bit, I guess you could say, lethargic. It's one of the lower beta, lower volatility names in the banks, among the banks group. And recently it's just been putting in sort of a bull flag after this bounce off that $40 area. But Today it sort of poked its head above that downtrend. I still like it. It's allowed the 8-day moving average to play catch up. It's one that I wouldn't lose sight of, and I think could definitely get a nice move above that downtrend line. And you talk about Applied Materials. It's one that we got stopped out of the hypothetical stop loss price on the AMAT idea from off the charts, but ultimately the stock did not break below this upper level consolidation. So it's one that, yes, it did leave that watch list, but it could be one that reemerges on the watch list. And today it broke back above the 8-day moving average after it quickly broke back above the 21-day following that big down day that you can see here that occurred on October 23rd. And just continue to watch the upper level of this range. I mean, that's what you want to really be focusing on, because that's where you could get momentum. The high of this candle, which is the upper end of the range, is 18.18. So that's the area you want to watch to see if we can get any acceleration above that zone, one to keep an eye on. And then I want to talk to you a little bit about, we have off the charts that's a swing trading type service, and then we have our virtual trading floor at T3 Live. And a lot of you who are watching this video could perhaps be part of that community, but you get different sorts of ideas from a swing trading newsletter like off the charts and the virtual trading floor. The virtual trading floor is built for more nimble type people who are able to be in front of their computer and monitor the market during the day. And you get a lot of really incredible cash flow ideas, not just from the contributors that are part of T3, but also from other community members in the room. And I got to give a shout out to R. Durant, Jim43, just a couple of the handles that are in the virtual trading floor helping to provide these ideas. And the community has been really outstanding, even more so than usual recently, in highlighting these ideas. And just a few names that I'll give you some examples on. GLUU. It's a low price stock that we don't generally feature a lot of stocks like this on our newsletters, but it's one that does a few million shares in average daily volume, so it's not a complete minnow. But it's one that one of our community members, R. Durant, has been talking about with a lot of conviction, and we've got a really nice, huge percentage moves over the last 3 days in this low price stock. You talk about going from $3 to today's high of 414. Today's high of 414. It did close a little bit off the highs. Maybe needs a little bit of a rest, but this is one that if you're looking for volatility to trade, if you're an equity trader, this is one that you can definitely have on your radar, and one that has been tossed around a lot in the virtual trading floor. Another one, a name NQ that's been obviously the source of a lot of controversy because Muddy Waters is a company that comes out and sometimes delivers bearish reports on various stocks, oftentimes in China. They came out with a report that was negative on NQ, led to a huge percentage move to the downside, a 50% drop. But when you get these stocks that are highly volatile, and these companies are going to fight back when they get these negative reports from a company like Muddy Waters. And NQ is taking a very aggressive stance, fighting back on these reports that are coming out. And so today, intraday, you have people on the virtual trading floor monitoring the news flow. NQ announced that they're going to fight back against these allegations and these negative reports, and it led to a huge percentage move of about 25% at one point in the stock. And that's only the type of thing that you're going to have access to people's commentary if you're in the virtual trading floor. Just another example of volatility that we're seeing in this market, that if you are a cash flow trader, there's a lot to do. It's not just a melt up in the indices. And then you talk about something like DDD. This is a stock that Mike Lee, Steve LeVay in the Trade the Morning mentoring room on T3 Live VTF, they love trading the 3D printing stocks, and they love commenting on the 3D printing stocks and game planning for them. And 3D Systems came out with what was labeled as a disappointing earnings report. Obviously traded sharply lower during today's session, but then you talk about volatility, huge move. And I'll go to the intraday chart. We'll go to the 34-minute. That's an intraday Fibonacci time frame to just see the types of moves you got today. And you talk about volatility. I know Mike and Steve were in and out of this stock, trading it both ways. And these 3D printing stocks just continue to provide that type of volatility that short-term traders crave. And if you're a short-term trader and you're trading this type of stock, you need to be educated and trained in how to manage your risk in these types of situations. And Mike and Steve do a great job of doing that. And one more that I know Scott and Mark have been involved with a little bit is Himax Technologies. Himax is a stock that they provide some components to the Google Glass product that Google announced they're going to expand sort of the pilot program for that. And they're saying anybody who participated in the initial Google Glass program can refer 3 people, and they can get the privilege to buy Google Glass for $1,500. but Hymax is a company that provides some parts for that product. And just going back to the chart, you can see there was reports about that expansion of the pilot program today. Hymax was moving a ton on that. Just another example of how being plugged into the virtual trading floor, that news was shared there soon after it came out. It led to a big percentage move, and just another example of the virtual trading floor providing value. And then the last thing I want to talk about is obviously the Twitter IPO has gotten a lot of attention. If you've been around T3 Live for a while, you've seen various videos that contributors to T3 Live have done over the years about IPOs, about the art of trading an IPO. Scott talks about it a lot. Mark is perhaps the best expert on it because he's sort of sharpened his tools during the tech boom, and so he's been around and sort of honed his craft in trading IPOs during the heat of the battle, and he's someone that I think a lot of people turn to in those situations. And what we're going to do for the Twitter IPO is we're going to formalize sort of a trial period for potential subscribers during the Twitter IPO. So we're going to put out some videos explaining a little bit about how Mark and Scott and some other guys tackle IPOs on the day of the IPO, how they measure supply and demand, how they use short-term patterns to potentially enter these IPOs after they come out, and how to potentially manage risk if you're going to trade these IPOs. And like I said, they're really talented at this. They lived through the tech boom and so many IPOs, and they've become really skilled at that cash flow type of trading, that order flow type of trading, something that's really worthwhile. If you're not in the virtual trading floor already, I would highly recommend that you stay tuned to T3 Live over the next week or so. We're going to promo that 7-day, no risk, no obligation free trial to the VTF during the Twitter IPO, something that I think could add a lot of value. But this has been John Darsie here for your daily recap. We'll see you back here tomorrow morning for the morning call.